There's a lot to watch on the rate front and the currency front today as well. Let's get to Rick.
Yes, Carl. And before we even get to the charts, let's look at what's going on with our February preliminary read on the Markit, M-A-R-K-I-T, manufacturing composites and service PMIs, and they are hitting the wires. 58.5 is on the manufacturing PMI. That is interesting because it backs away a bit from the cycle high, recent cycle high of 59.2. If we look at the composite at 58.8, that usurped its cycle high, COVID cycle high, by 1/10 from 58.7, which was the cycle high. And finally, we'll finish up with the service composite PMI. This is the largest swath of the U.S. economy. And at 58.9, it usurps the 58.4. That was the final read, the high post-COVID, and that was in November. So definitely some improvement there, but remember, these are preliminary. Now let's get to the charts. And you know what? A week to date tells you a lot of information on 10-year note yields. Of course, we are now up 10 basis points on 10s, 10 basis points on 30s for the week. These are substantial moves. But if you think they're only in the U.S., you're wrong. It's all high-quality sovereign debt. If you look at what's going on with regard to 10-year boons, here's a one-year chart of our 10s. You can see the move, one-year highs plus. Look at boons for a one-year perspective. Not quite at the one-year mark, but we're definitely testing some key levels. And in this case, that minus 27, and we want to pay attention to that. And finally, a 1 year of the UK gilt, their sovereign, at 68 basis points. You can clearly see the run-up, and it will continue, in my opinion, as we continue to make progress, of course, against COVID. And you see these large stimulus plans being floated, not only in the U.S., but other large economies as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.